in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, and TractorZoom, delivering insights. Chip, how you doing this morning?
Well, I got my seatbelt fastened. It's going to be a bumpy ride this morning, Casey.
It is. Well, yeah. So I woke up this morning and I'm looking through my stuff, getting ready to talk to you, and I looked down at the my 6:30 in the morning alert that I get on my phone. It says corn's down 7.25 for the May contract, down 6 in December, and then May soybeans. You might as well just sink the ship because it looks like it's going down to 15.75 in the May contract, and November beans are at 14.25. Then I get my latest update, kind of rebounded a little bit, but soybeans got worse. Man, I guess there's a couple of oil juggernauts decided they're going to see who's got the bigger swing in the marketplace. And it looks like Saudi Arabia is going to try to ramrod that. So he's got two incredible things going on. We got a big oil kind of piss and match going on here, and then we've got the coronavirus. It looks like it's getting worse before it's getting better. So I guess, wow, free for all here.
It is, and obviously we were fighting the issues with this coronavirus issue and how that was slowing the world economy down. That in itself was kind of a black swan, and then this energy, this crude oil deal is definitely a black swan. Unfortunately, you combine them at the same time, and it's just decimating the financial markets here. So, the detail of that is OPEC met, OPEC plus Russia couldn't agree on cuts. Actually, Russia would not agree on the cuts. Saudi Arabia thought about it for a day and said, forget you, Russia. We're going to just flood the market with cheap oil. We're going to offer our oil at a major discount, 20-30% discount on the world market. And we're going to try and break you, Russia. Let's play this game. They've tried this once before. It didn't go very well for them. Obviously, in the short run, there's a lot of pain. They're going to obviously reduce their oil revenues as a country because of that, as well as everywhere across the country. So you combine these two things, in the overnight trade, and it's just got the makings, unfortunately, of a real ugly day. It's already ugly enough. We closed crude oil on Friday at like 41 and change, and at one point overnight, we were trading crude oil sub $29.
Holy crap.
And so massive move there. That alone would have caused some havoc in the stock market because oil is a big, component of a lot of companies in the S&P 500. But you combine that with the coronavirus issue, which continues to progress, unfortunately, and it seems like it's speeding up, not slowing down. There are some bright spots. It appears it slowed down a little bit in China and Korea. But certainly here domestically, it seems like it's picking up steam. And we've got some ugliness across the board. Hard to spin it. It's hard. It's really hard to spin this. It's going to be ugly. We better swallow hard and get ready for some issues here. I think the take home is, though, as you mentioned earlier, it could be worse, right? The grain markets open the overnight, 7 p.m. Central. They've had all night to trade and all morning. They're on a break right now until 8:30. But if they were going to go limit down, they had all the time in the world to do it. There will be some end user pricing on a scale down basis. This is kind of, if you're Japan, Mexico, maybe even China, you have to use some of these agricultural products. It's kind of a blue light special here we got going on. So there will be some end user pricing on the way down. The livestock markets look like, at least on the screen, a lot can change here in the next half hour or so. on the screen. It looks like hogs, cattle, feeders could all be limit down initially. But that's kind of where we stand, Casey. It's unfortunately kind of a historic, unprecedented day. We're going to have a lot of pain in the financial markets. It's going to spill over to our grain and livestock markets. But that's where we're at.
Yeah. So looking back at the markets here, we've pretty much given back all that we gained here for the most part. I mean, we got back up to about a mid-February high at 383, 385 maybe for a minute. Maybe 383 and a quarter it looks like was the high there. But if you go back to where that was, back to about February 18th, where you're looking at corn at in the 360s, low 350s kind of thing, or high 350s, we're vastly approaching giving back all the gains we've got. So I mean, I guess this is where that plan comes into play. So what are some of the stuff you're talking to your clients about right now?
Yeah, that's last week we were right back into the range, like you mentioned, mid to upper 380s on May corn, and it looked like we had every indication if we could get a little stability in these financial markets, we could maybe rally a little bit. China bought some U.S. sorghum last week, 110,000 metric tons. There's rumors that they no confirmation yet on this. They did confirm by the U.S. sorghum. There was some rumors they were buying some U.S. wheat and possibly some U.S. DDGs. So, kind of put a little bit of breath of fresh air back in the markets. But now this latest debacle here over the weekend, has them close to the lows. We didn't make new lows in corn. What are we talking about with producers? Your crop insurance guarantees, very important right now. It's not the year with all the risks involved there to buy down on crop insurance. In fact, there's some, private products that you can buy up, that guarantee. The closer we get to where prices are to your crop insurance guarantee, there might be some moves to be made there, on some call purchases so that you can sell grain into on a rally. If we would catch hold here and maybe get past this little crisis we're having in the financial markets and rally more, get back closer, upper 390s to the $4 area on December corn, new crop corn, would be looking to maybe go the other way and make some sales, purchase some puts to protect the downside, prepared to maneuver either way. The bottom line is we're going to try to get 2 to 3 steps down the road in a position on new crop corn and beans where we're right no matter what happens. We have a lot of risk taken off the table and, hopefully some profits locked in. And then if China goes on a buying spree and things stabilize and we rally, we've got the upside open, but the downside protected. So you just have to stay nimble in this market. It's not a time to, stick your head in the sand and not worry about the markets. It's stressful, but it is definitely the time to have a plan, refine your plan, and know what you're going to do, whether corn and beans rally 30, 40 cents or whether they sell off another 20, 30 cents. You got to have a plan and execute that.
Yep. What's your feel for this situation we're seeing now in the oil market? Is Saudi Arabia going to play this game for 30 days, or is this something that they're just going to wait and see what happens?
I think they're prepared to wait and see what happens. Okay. That doesn't mean that there can't be a quick resolution, right? You could see Russia cave in. You could see them go back to the table and agree on production cuts. We could snap back very quickly. The longer that it goes and the more they flood the market with cheap oil, unfortunately, the more readjusting we've got to do to some of these energy-related companies, not only here but around the world. It's you go to bed Friday night with crude oil in the low 40s, and you wake up and Monday morning and we've traded under 30. That's a big adjustment on some of these.
Yeah, that's a quick snap too, man. That's one of those things where you, like you said, I mean, you lose $15 overnight, and that is, you can kind of prepare for it when it gradually happens. When it happens all of a sudden, man, I'll tell you what, that turns things on its head real quick, and people start making some pretty rash decisions to cover their positions pretty quick. And if this continues this way, we could have some low 20s here pretty quick if this continues the same way. But the first knee-jerk reaction to the marketplace is always the biggest dip, right? And there might be some upside here in a little while, but it's going to be some pretty rough sailing for the foreseeable future, I guess.
Yeah, no doubt, and there'll be painful adjustments. There's a lot of the U.S. shale production is estimated, upper 40s to about 50 for their break-even costs. So it's supply and demand, and they've seen booms and busts in oil country for years and years and years, and
yeah.
That's again, it's going to be painful for the higher leveraged, higher break-even type production companies. It'll probably shutter some of them. It'll probably break some of them, unfortunately. Some of those states, Texas, Colorado in particular, probably going to be in for, a little rough go of it here for a period of time. But, low prices increase production, right? There will be a backside of this as we come out of this. Low prices cure low prices. We will increase production. I should say demand with lower price levels. And as you then cut production, whether that's, companies going out of business, shuttering production, or a combination of that, and then eventually there's an OPEC production cut, you could come screaming back, into the 40s and 50s just as quick as we drop down into the 20s and 30s. So very, very volatile time. Unprecedented volatility, really, in some of these markets. Interest rates are at all-time lows. Gold's at a 7-year high. Multi-year lows in crude oil. Stock market, 2.5 weeks ago, all-time highs in the stock market, and now, we're somewhere around 14% correction and counting. So it's happening fast, as it always does.
All right, Chip, plenty of stuff going on here. Folks, we're working on a plan or just need some help with what's going on or just ask you a general question about the craziness that's happening today. What's the best way to get a hold of you?
Yeah, best way is just give us a call at the office, 309-550-7213. We'd love to chat with you. It's a very volatile, scary time frame, and it's more critical than ever to have a plan.
All right, Chip. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check out my website at movingironllc.com. Also, check out TractorZoom.com as well as DawsonTire.com for all the neat stuff that they have going on there. Also, check out the Global Ag Network and all the great podcasters there as well. So until next time, I'm Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.